Hello. We're back again, and yeah, I woke up this morning. I saw this article on the Financial Times. So Wise is going to leave the London Stock Exchange, and they're gonna move to the New York Stock Exchange. And it got me thinking, why does this keep happening? Because Wise is not the first company to do so in recent times. I think previously there's been Just Eat, and there's also been Flutter, who've left the UK for pastures new. So yeah, that's what this video is about, just to kind of explore a little bit more into why. I've actually got a video from the Revolut founder for you as well, that we're going to watch a specific part where he's talking about the pitfalls of listing on the London Stock Exchange. So yeah, let's get into it. Hope you enjoy it. So why do companies leave London? So I'd say it's two things. I'd say it's liquidity issues, and I'd say it's overregulation. So overregulation in the sense where the London Stock Exchange is one of the most regulated stock exchanges in the world, and that overregulation puts a lot of companies off listing on the stock exchange because there's a lot of compliance and it's really time consuming. And on top of the overregulation, the London Stock Exchange is not that liquid, and it's not that liquid because the people in the UK are a bit different from the people in America. In the UK, we're a really risk adverse nation. We love safety, we love brick and mortar, we love things that we can hold and things that we can touch. I'm not sure why. I think a lot of us grew up with father issues. I don't know why I said that, but anyways, yeah, we love property. Even when it comes to equities, we love stocks that pay dividends, as opposed to America. Because if you remember, Apple for a long time didn't pay dividends because all their retained earnings, they kept that, and they built up a huge cash reserve. So if any opportunities presented themselves, they could just be agile and go for those opportunities. So yeah, in the UK it's a bit different. We love companies that return cash back to the shareholder. So yeah, in a way, it kind of limits the growth of companies. The culture is just different in the UK, and because of that risk aversion, we have a smaller retail base in the UK that are willing to invest in equities. So yeah, another example of the regulations in the UK. So British pension funds 25 years ago, they had about 53% of their funds allocated in equities, but over the past 25 years that's dropped to only 6%. So that's almost a reduction of 100%. And that's due to a big loss they took in the 90s. So the government made it harder for pension funds to invest in equities. And yeah, that's another example of regulation kind of messing up investing culture in the UK. Carrying on, what have I missed here? Another reason is private equity. Because the private equity funds have a lot of cash, a lot of companies can afford to stay private because they can still achieve that liquidity by getting a private equity exit. So they can be bought even though they've stayed private for so long. So there's just not a lot of incentive to list on the stock exchange because you can still achieve that liquidity if a private equity fund buys you. And they have been doing so in recent times. They've been slashing the cash. So the incentive for IPOs in the UK is just going. Yeah. I think those are all the main points I wanted to cover in the slides. There's 10 slides here. Again, as I said, if you want to have these slides, you can download them as part of my newsletter. The link is down below. So the main thing is I wanted to go into this video.
Motion. It's a personal assistant.
Yeah,
what it is now. Do you think the market makeup of banking will fundamentally shift in the next generation? And what I mean by that is I saw actually you again talk with Martin and you...
This is the part I'm talking about. So yeah, watch this.
There's no way this is going to get capped in, but I have to ask it.
Sure.
Would you list in London?
Or list in London? I mean, problem with the UK is if you think about UK versus US, UK is much more liquid, right? And then trading in the US is free, right? If you look at trading in UK, you always buy a stamp duty tax, which is 0.5%. So I just don't understand how the product which is being provided by UK can compete with the product provided by US. It is less liquid, so it's much worse compared to US. Plus,
the UK is less liquid. You don't get liquidity when you need liquidity. You know what other time where I needed liquidity and I haven't got liquidity? With my ex-girlfriend. Oh my god. I don't know why I said that. That was really bad of me. She's a great person. Honestly, I'm gonna play the video.
it's much more expensive because it pays stamp duty, right? So like, it's just not rational.
And so you would list in the US.
Look, I consider myself a rational person, right? That's all I can answer. So
he's giving Keir Starmer a warning. He's saying that he's a rational person. So do with that what you will. This is the reason why companies are leaving the London Stock Exchange, because of overregulation and the lack of investor appetite for equities. So we need to do something about this. Not we, because we're just the people, but people in government need to look at this and they need to take note, because a lot of superstar companies are leaving and a lot of talent leaves with those companies. A lot of people I speak to today, they don't see their future in the UK. A lot of young people, a lot of talented people I speak to, they don't see their future here because of things like this. So what are you meant to do? We're just a country of mortgage buyers, and not everyone can be a landlord. It's not possible. How can everyone be a landlord? This is what's happening right now. Everyone's goal and ambition is just to be a landlord. And how can you have a growing economy when everyone wants to be a landlord? You need people to take risks. You need people to create startups, people to IPO, create jobs, and it will never happen as much as it happens in the US at the rate we're going on. It never has actually happened at that rate, because the US is kind of like the mecca of capitalism. I don't want to offend any Muslims. I'm sorry if I did, but yeah, you know what I mean. But yeah, so this is just a message to the people in charge. Listen to this, listen to me, and do something. But yeah, that's what I wanted to say. That's my video.